Well, hey everyone, welcome. And welcome, Robert.
Thank you very much.
Of course. So super excited to have Robert today. We have a really interesting fireside chat today called Are We There Yet? Getting Real About Real Estate Technology. So as we've seen a lot, just an incredible year of innovation in real estate technology, we'll be diving into what that looks like and answer the question, are we where we need to be yet with real estate technology? So we'll be diving into that.
Which the answer is we never are there yet, but we're gaining on it.
Yes, we're gaining some ground. So Robert, let's start off with you and Vornado. Everyone knows Vornado as a company, but let's talk about your projects and what you're working on right now.
So a little bit about Vornado, I guess, at first. So as most know, we're a large publicly traded real estate investment trust. Our focus is New York City at this point, but it's been an evolution over the last few years. Vornado used to be large New York City holdings, a largest landlord in Washington with a big portfolio there, and a fairly large, sizable retail portfolio. And over the past 5 years, we spun off two public companies. One was JBG Smith down in Washington, which is the Washington portfolio, and one is Urban Edge Properties. So we've pivoted or transitioned to a true New York City urban focus. I think one of the issues was that the markets were always, what do you guys want to be when you grow up? Because is it Washington? Is it retail? Is it New York City? Yeah. And I think the values in New York City and the both EBITDA and asset values were such that the idea was to deconglomerate a bit and focus really on that urban campus. Now we do have two properties outside of, we have a few, but the two major properties outside of Manhattan are the Merchandise Mart in Chicago, which your folks from Realty ads appear before service.
Yes.
And we own 555 California Street in San Francisco.
Okay, nice.
But those two were kind of hanger-ons.
Yeah, so still some great markets as well.
Yeah.
Great markets. And then, in terms of your team, how does that compare to other owners and operators and how you make decisions?
So, from a technology?
Yes, from a technology perspective.
So we're probably a little different than most of our colleagues in that we're fairly vertically integrated in most areas of technology. So under my supervision, we have a fairly large development and programming staff. We, in fact, our ERP system is our own.
Okay.
And we do use all the best-of-breed point solutions that orbit the ERP systems, and we do a lot of integrations. But I think what gives us a bit of an advantage is because we control all of our data and all of our programming, our ability to integrate with the best-of-breed apps that are in the marketplace is a bit better than others. The other thing that we've done, and again, this is probably because we're so New York City focused, and we can scale in New York City. Yeah. A lot of our colleagues, other REITs that are kind of national, they have technology teams, they outsource a lot, and there are things they can't really do with their own personnel. As an example, and it's really more on the OT side. We should probably break the conversation into IT versus OT, right? Our traditional space in the CIO world was in the IT, all of the applications that run the corporation. Yeah. And frankly, the building technology space was pretty dormant for a long time. Yeah. And that's where all the acceleration right now is in OT. So things like turnstiles, elevator systems, sensors, other amenities in the building, those are the sorts of things that people typically outsource to do. Because again, we're New York City so focused and we have about 30 million square feet there, we have an internal tech team, in addition to the IT department, an internal operations technology team. So we actually put in our own turnstiles, fix our own. The only thing we don't touch is really the elevators, but virtually every other part of the building, it's a Vornado employee that's doing the work. So it's a bit different. But again, whether you do it with your people or you do it with integrators, for years we used integrators in all of our buildings, and we said, we could probably do it better and cheaper because, again, we're at scale in one very densely populated urban area. Yeah.
And can I ask, what did that decision-making process look like? Did you consider outside sources for that?
Well, we transitioned from outsourcing to bringing it in-house. And we did that. It wasn't an all at once. Yeah. It started with the wide area network. So to today's world, your buildings kind of have to all be, they're not just, well, if you go back a bunch of years ago, the building didn't have one network in it. It had siloed networks for the elevator systems, the turnstile systems, the fire and safety. Those are still pretty much separate. But there wasn't really a building network. In today's world, the building really does have to be on a converged network, given the interoperability that all of these systems in the building need. They can't be separate. And more than that, your network of buildings has to be, your collection of buildings has to be networked. So for us years ago, the first thing we did bring in-house, so it was really gradual, was we had an outside provider who was managing the wide area network across the buildings. I said, well, look, we already have kind of a wide area network across our buildings because of our employees that are located there.
Yeah.
So why shouldn't we be managing the other network? We took that network in years ago, and then over time, the integrators start to disappear. We said, well, why can't we do turnstiles? No, we can. And so it was a slow but sure, evolution.
Yeah, that makes sense. And in terms of Vornado, I mean, you are very New York-based, and in the world of real estate, I think all eyes kind of point to New York. So I think your initiatives are kind of paramount to what we're looking towards right now. What are you and your team's biggest initiatives that we should all be doing ourselves?
Well, as you know, is in the press a lot, and you can see on our website. The big deal for us is the Penn District, right? So in and around Madison Square Garden and Penn Station, we own about 12 million square feet, and that's been, I don't want to say dormant. It was, call it B+ space for years, right? That's just not a great area of town in terms of it's not your A+ buildings. Over the past, I guess 8-9 years, Hudson Yards springs up to our west, and Hudson Yards is a really beautiful project. And it was really good for us because now you've got these triple-digit rents and very high rents just west of us in a neighborhood that's quite frankly not as good as right around the Garden. The problem around the Garden is it's older buildings.
Yeah.
So we've embarked on an enormous capital plan. About $2.5 billion is being spent in and around Penn Plaza area. The first part of which was Monahan Station. I'm not sure if any of you...
It's beautiful. I was just there.
Yeah, so if you're in Monahan Station, it's great. It needs to be filled. People need to be coming back. But that was a good and long deal. It started back in 2008 where after Senator Monahan, where the idea was to move all of Penn Station into the old post office building, which is now Monahan Station. And the recession hit. It didn't come about. Another 10 years lingered. The New York Economic Development Authority went back to bids. We won the bid again. Anyway, long story short, for us now, the train station, if you go to there, it's the front half is, of course, the train station. The back half is Facebook.
Yeah.
So originally the plan was the front half was going to be the train station. The back half was going to be a new Madison Square Garden. Wow. The original plan was tear down Madison Square Garden. And then we were going to get the land and build a skyscraper there. And in exchange, we were going to rebuild Madison Square Garden in the back of that building, which gives you the idea of the size of that building. Yeah. So it turns out the Dolans spent a lot of money, upgraded the garden. The answer is they're not moving. Yeah. So the back end of that building became office space, and it's 730,000 square feet. So it's almost like a skyscraper on its side. And Facebook single lease took the entire building. That was a big deal.
Wow. Well, that goes to show what's happening in the past couple years as well.
That's one of the buildings, right? So we're renovating 1 Penn and 2 Penn. Then the concept here is a district, right? And this is where I think a lot of development is going. A lot of tomorrow's office buildings and office campuses are going. Yeah. So we have this unique canvas, and the idea really is to try and with all the buildings there. We're renovating a lot of them. And then Hotel Pennsylvania, which is across the street from the Garden, is currently being torn down. And up will go a 2.8 million square foot office building. Wow. So when it's all done, the idea is to have an integrated campus with a lot of amenities and introduce really different tenant experience and a retail experience. And that's really the big deal at Vornado right now.
Yeah, that's great. So we've been in an incredible year or two with a ton of technology and innovation. And very big question, but I love if you could just kind of hone down to, if you could pick the biggest challenges for real estate owners and operators right now, and the role that technology can play in resolving them. Big question.
Yeah, well, I think it's on the OT side, right? On the IT side, we've had our systems in place for years, your accounting systems and work order systems and discount, everyone's using Argus or Yardi or MRI. I mean, the stuff that floats around in your corporation has been mature for years. What hasn't been is the technology in the building. Yeah. So, and I think what we've seen in the last 4 or 5 years is an amazing acceleration of technology that address the buildings. And it's really all centered around occupier experience.
Yeah.
And I think that's, I think it's the WeWork effect. A bunch of years ago, WeWork came along and said, wait, there's a lot more value in your buildings than you know. And everybody was like, wow, people actually care where they go to work and what it's like. You add to that WeWork effect, the effect of COVID, and trying to attract workers back to the office. I think those are the factors that create this big explosion in development. And I think the other thing that is interesting is that, because it's really a confluence of events, the ease at which you can now build an application. Years ago, it was much more difficult. Today, you can spin up an Amazon instance in minutes. Sensors, apps, everything is so much easier. So I think you've got an acceleration of applications being built. But again, it's all on the occupier experience. And so, COVID means that we all need to be in a touchless world, right?
Yeah.
So there's some health safety things that COVID brings about. And then there's, I think, the wanting to make the occupier experience unique and different to be able to attract workers back to the office.
Yeah. And as we see innovation and technological growth, cybersecurity, of course, becomes a bigger and bigger conversation. What are the biggest cybersecurity risks right now, and how are you guys dealing with them?
Well, I think ransomware is on top of mind for everybody right now. And I think that I'd say the biggest risk is the burgeoning network that runs the buildings.
Yeah.
We've been protecting our corporate networks for years, and we have good controls around it. But now all of a sudden you've got the building network that's getting bigger and bigger, with more IP addresses and more different disparate devices.
Yeah.
It's an interesting difference. In the corporate network, you have people and not a lot of machines.
Yeah.
And people aren't great because they behave poorly, right? So we have to protect.
I think we're fine.
but that's where your risk is in the corporate network, is people clicking on bad things and that, right?
Yeah.
So on the OT network, you don't have tons of people. You have tons of machines and devices. BMS systems, elevator systems, all kinds of things. And so, but the risk there is that all these systems they're not mature. Many of the manufacturers haven't really hardened their devices for cyber attacks, and so some of these BMS systems are 20 years old, or more, and the software that runs them is very outdated. So I think the biggest risk from a cyber point of view is protecting the building. And people say, well, why? What are you protecting? A ransomware attack that can make a building, I don't want to say inoperable, but very uncomfortable, let's say, is a really dangerous event. So I think in Australia, it was 2 years ago in the middle of this summer, which is our January, February, very hot day, and the BMS system was taken over by ransomware, and it took them like 2 days to restore.
Yeah.
And during those 2 days, the shopping center had to be emptied because it was just not fit for occupants. So if you're in a big office building, small office building, and your building gets attacked to the point where certain things are inoperable and tenants have to leave, it's a major problem. But I still think it's somewhat operational, obviously, but then the bigger issue is reputational risk. I think cybersecurity in real estate,
especially these days,
it's reputational risk. You really got to protect against.
Yeah, that's huge. And of course, with this growth, we're seeing just incredible investment in prop tech. Numbers that I think none of us ever thought that we would see. What trends are you following?
Well, I think it's like $5 billion this year has been invested in prop tech, which is good and bad, right? The bad is that much of it will not come to fruition, but that's every cycle, right?
Yeah.
Every cycle, a lot of capital is spilled and some hit. Yeah. The trends are all in, I think a couple of trends, right? So there's the smart building angle. There's so much data that now is being captured from building systems, and the theory is that if it's actionable, if you can collect it and act on it, you can do a lot with the building. So one silo is the whole smart building. Again, the occupier experience between sensors and amenities. So you'd like to know that, like as an example, if you have food service in the building and you have common areas in the building, wouldn't it be nice if I could order the food from a table somewhere in a common area, and the food is delivered to me right at that spot? Why? Because there's a sensor that knows exactly where I am, and the food purveyor knows exactly where to bring it. So there's so many things like that between amenities in the building, the smart building concept with collecting data, and I guess indoor air quality and health and safety. I think those are the Those are the three big areas, at least, that I see a ton of technology.
Yeah.
And there will be, there's definitely going to be a lot of good companies and a lot of good products that come out of it. So it's exciting.
Yeah.
This is a very exciting time from a technology point of view, from the OT perspective, as we're saying, as we're talking about here.
Yeah.
Faster acceleration than we've seen in many, many years.
Yeah. And along those lines, the M&A space. I mean, Robert, we started talking about this conversation, I think, 6 months ago. And we were going to talk about this, and we were saying, we're going to see some interesting things in the M&A space. And, I mean, the past couple months, we've been seeing some really cool stuff.
Yes.
What are you watching there?
Well, you saw JLL.
Yes,
and you saw VTS, bought two companies, a lot of money. I think that's normal. The normal cycle is the companies start to get bigger and bigger, and they go through their Series A, B, C, to D, sometimes E, and they either have to have enough organic growth and size that they can have an exit. An IPO is what, the biggest, but that's only going to be handfuls.
Yeah.
So I think you're going to see the normal ecosystem is you have a lot of nascent companies that have nothing, angel rounds, and then you're going to have your A's and B's, and some are going to grow to the point where they themselves can become tomorrow's giants.
Yeah.
Look at VTS has executed very, very well over the years.
Yeah.
And they're certainly poised to probably be a public company at one point. That's an exception probably in our space.
Yeah.
But I think you're going to see the M&A activity because you've got all these companies that are not quite big enough from a critical mass point of view to have some very big exit.
Yeah.
In which case, it's always going to be a combination. The question then is, what are the combinations that make sense? Where is there synergy between, in fact, if you look at Building Engines, I'm not sure this was great or not, but Building Engines acquired a CAD company right before, a year or two before JLL bought them.
Yeah.
And the notion was, I'm a work order platform, and I don't have any CAD diagrams.
Yeah.
So why shouldn't the people who are logging on with their phones or to submit work orders, why shouldn't they be able to drop a pin? You can drop a pin and have an Uber pick you up, right?
Yeah.
Why shouldn't you be able to drop a pin on the exact location of the building where you have a too hot, too cold, issue? So that was cool. There was a logic to that, that acquisition, and I think that's what that'll be the challenge is finding those companies that make sense to combine.
Yeah, and as we talk about this, all the investment, some companies are going to make it, some won't. Are there any areas that you see potentially not making it or maybe fading in relevance in the years to come?
Well, I don't know about not making it, right, but fading in relevance. So the IT side, accounting systems and lease projection systems and discounted cash flow, so the stuff we use to run the business is stable. There's a bit, I would say it's fading only because it's probably mature, and until there's some really modern platforms out there, we're all using the same stuff. So I'd say that's the fading side, but on the other side, again, it's everything in the buildings that is going to be of relevance and prominence.
Yeah, definitely interesting. And sustainability, I think we'll hear a lot of themes carrying back to that over the next couple of days. Of course, becoming extremely much more important and relevant to all of us. But what role are you seeing technology playing in helping owners and operators to meet their environmental goals? Yeah,
well, that one's easy, right? So sustainability is top of mind for everybody. And I don't know, in New York, we have Local Law 97. I'm not sure what is here. But I think most of the areas are passing laws for carbon neutrality and reduction of carbon levels. So the first thing is if you can't measure it, you can't demonstrate your sustainability goals are being met. So I think that puts a lot of pressure on everybody to really measure the buildings much better than they've been able to, right? So that's absolutely essential. But then, like we said a few minutes ago, ideally you're not just measuring it, but you're getting actionable data that can help you run the building better. I mean, the dream is, of course, where the building, there's enough information coming from the BMS systems, the sensors, outside thermal conditions, et cetera, that the building BMS system can adjust itself and be a machine learning kind of a ecosystem to run the building as efficiently as possible. No one's there yet. But so you've got a lot of systems, you've got a lot of data being gathered. And then you've got a bunch of platforms that are aggregating data. I mean, that's one of the areas where you say, where's a lot of the action? Data aggregation. Right? 'Cause you've got all this disparate data coming from all these systems, and the question is, where do you house it and how do you collect it? So there's a pretty big push right now in that area with companies that are doing data aggregation, but it's really just there for analysis. It's actionable by building engineers in theory, if they're looking at it and harvesting it. Going from that stage to a machine learning world where that actionable data is acted on by machine, is that's the dream for the real smart building.
Yeah.
And that's where I think you're going to get the best bang from a sustainability point of view.
Yeah.
I think it's an inevitability, but like everything else, it's probably years away from being mature.
Yeah.
You know?
Yeah. What?
5-minute warning.
Oh, thank you, Dan. Thank you, Dan. Something I do want to dive into with the sustainability and prop tech as a whole. You mentioned sustainability technology is not there yet, and a lot of real estate technology probably isn't. We're seeing a ton of innovation in real estate technology because we're having to bring in because of that some folks who don't know real estate as well, and it's a partnership. What does that partnership look like for you? Is there a two-way conversation with a lot of your tech providers, and how does that look?
Yeah, although, well, we look at a lot of technology every year, and there is a minimum for us in terms of, the problem is we can't go on something very small because we can't put the enterprise on it, so we tend to look once they're a little bit higher. But I will say I think most of the firms that we hook up with or look at there was a connection to real estate.
Yeah.
There are handfuls that get into real estate technology because it's a good opportunity, and then they have to learn about real estate, which is a problem. But most, I think, actually have come. A lot of these people, a lot of these companies, are people who are in the real estate business. They saw a problem that wasn't being solved, and then they did great things, and they went out and took risks and started prop tech companies.
Yeah. That's awesome. And then Vornado, we talked, a big New York City player. As you look to make decisions, especially around technology, how do the decisions you make compare to, maybe a suburban owner, operator?
Yeah, I'm puzzled by that. The hottest area right now in prop tech space is probably the tenant amenity app, right? You got to have a building app.
Yeah.
And in a very densely urban populated area where the buildings are much bigger and you will have a number of amenities in the building that you can actually activate through an app, like ordering food, getting your car from the parking. Obviously, a building without turnstiles. I mean, the first need is how do you open your turnstile? So your app should do it.
Yeah.
But many suburban buildings don't have turnstiles. So one of the cynical comment is opening turnstiles, putting in work orders, and ordering food. Yeah. Well, I have Uber Eats for food, so do I really need the landlord's app for food? That's the cynical view of the tenant amenity app. Yeah. But again, we're all terrified of the occupier experience. So in my own head, I'm saying, in the suburban office building, where you probably don't have the kind of amenities that you're going to have in a large urban tower, and you don't have turnstiles. Yeah. What are the events in the building? What's the real value to the occupier? Yeah. And the HQOs and Lanes and Rises of the world who are out there with, and Equiums who are out there with their tenant amenity app, they're really hitting obviously the urban landlords. Yeah. And when they look at their total addressable market, when they look at valuations, and everyone gets really excited about the square footage in America. Yeah. I wonder if the total addressable market is really that big, because when you go outside the urban areas, I don't know that the suburban play is as great. And it's actually kind of similar to the VTS conundrum, right? Great acceleration, great take-up, but it's all office. Yeah. In industrial, there's tons of industrial space. Do I really need to spend that kind of money on a leasing app for industrial space? Yeah. So, and then if you charge that segment way less than your office guys like us who are paying a lot. So, the different sectors of real estate do present different challenges and opportunities and needs. And you really have to look at prop tech, not just for what it's doing for the building, but what asset class it's servicing. Yeah. I think.
Yeah, makes a ton of sense. Yeah. And Robert, I know you are probably a prime target for tech innovators everywhere with their new products. You have a lot of products coming across your desk. Is there anything that's really catching your eye that you're excited to see just continue and boom?
Well, personally, and probably just for us, I mean, obviously, everything operational in the buildings we continue to look at, and that's just kind of the normal cycle. Yeah. The data aggregation apps, I think, are, for me, particularly interesting. We have a ton of data in our enterprise, and we have a BI warehouse. We've got tons of SQL databases. We have lots of different systems. We do a lot of reporting and analytics, but we're not great data visualization people, right? And that's a skill out there. Yeah. So, and a few years ago it started and they were aggregating data, but the visualization wasn't great. The dashboarding wasn't great.
Yeah.
You now have a bunch that are really doing some interesting things, and so a few years ago, I would have said I don't think this is an important silo.
Yeah.
But now that I'm seeing the maturity of that and some of these really cool ability to take data from lots of different places and give you actionable dashboards and drill downs, I think the data aggregation area is for me personally, something I'm going to continue to look a lot at in 2022.
That's great. Well, we actually have a few sessions covering that this week, so you guys have to tune into those. So I want to bring us back to this question. Are we there yet, Robert? With real estate technology, have we met the need of real estate, and where does that, if there is need, where do we need to go?
Well, I think the overall answer is no, we're not there yet. Real estate has been a laggard industry for many, many years.
Yeah.
And I think it's been a laggard industry because technology has traditionally not impacted real estate the way technology impacts other businesses.
Yeah.
Businesses that are operating on really small margins, where you can, through logistics and technology, change the formula and drive the bottom line, those businesses have adopted technology way faster than real estate. Real estate, in the end of the day, it's about it's location, location, location. It's about the structure of the deal. It's about the market rents. And technology has been, to me, over the years, it's been, okay, I can shave some G&A costs if I just automate some stuff. But it's not strategic.
Yeah.
I think now, with the focus on the buildings and the way the buildings operate, it's now finally becoming a little bit more strategic because you have to have this. So it's not just about saving G&A. So I think the answer to the question is, no, we're not there yet. I mean, I don't know anyone who's actually there, right? There's always a tomorrow.
Very pompous to say we're here.
There's always a tomorrow, and change. Yes. We're watching change in our society happen at the slowest possible. Yeah. It's never going to be as slow as it is today, which is a scary thought, right? Yeah. So you're never there. Yeah. But what I would say optimistically is that the landlords are more technology ready now than they've been in years, because I think there's finally a value proposition that people are seeing. Yeah. And so adoption's better. It's a more active ecosystem. So, are we there yet? No, but I think we're looking pretty good, better than we've looked at in years. I've been in this for a long time. I've seen a few of these cycles, and a lot of money is spilt on the ground, and landlords are just like, eh. Yeah. But now it's not. It's not that. Now it's
that water's cleaned up immediately.
Yeah. No. Now you really, it has a real impact on your building.
Yeah. Yeah.
So it's exciting.
Yeah, definitely interesting. Dan, did we have any questions?
We do.
Awesome.
As a reminder to everyone, if you have questions throughout the session, you can go into the particular session, click on live discussion. It's a green button, and drop them in there. But shout out Patrick with the first question via swap card of the day. How do you think about assessing and evaluating OT vendors from a cybersecurity perspective prior to installing or updating in-building technology?
That's a long question. That's a good question. And it's really important. So we have a fairly rigorous questionnaire. The good thing about cyber in the buildings is it's not that different from cyber in your corporate network. And I don't think protecting the buildings is rocket science. I think it's blocking and tackling and good hygiene. But so along those lines, the first thing we start with is a fairly lengthy questionnaire, which we, by the way, get submitted to us by tenants all the time as well, who want to understand our cyber profile. So we look at that. We look at the maturity of the company. How much of the data, what are they selling us? Are they selling us something with a cloud presence? Is there data in the cloud that has to be protected, or is it all on-prem? Those are pretty big, it's a pretty big fork in the road. And if there is a cloud, if there's a cloud aspect to it, are they certified? Have they done the self-certifications and stuff? ISO or other certifications. So a lot of interviews with ultimately with all the questionnaires and check the box. They do this and that. We generally then have a fairly lengthy interview with the company where we discuss what's the structure of your corporate network, what's your production network, how many DBAs do you have? Can your developers touch production? The kind of the normal interview you'd go through to assess somebody's cyber readiness.
That's great. Anything else?
That is it.
Awesome. Well, Robert, thank you.
Yes, Robert, thank you for joining us and sharing your insight. What a great session. Now we're going to take a quick break.